A new era is upon us. Pulse has taken the world by storm as the leading Web3 social media. Beyond current features like casting, tipping, inscription trading, and earning, it's now elevating to the next level, on-chain.
Soil, a fully regulated, seamless link between traditional finance and the digital crypto world, offering secure returns fully backed.
What's up, my friends? Jimmy here. It's time for another live stream, another show. The question is, why is Ethereum tanking? Why does this not really meeting our expectations? And is the Ethereum ETF really a buy, the rumor, sell, the news event? What's going on with the chart? So quickly, let's dive in. Hope you guys are doing well. I'm going to remove myself from the screen because I want you to see the full picture. Ladies, gentlemen, it seems that there was no audio in the last 15 minutes. I am so sorry for that. The audio should work right now, and I removed myself, and I assumed that I just disabled my camera. Sorry for that, ladies and gentlemen. Um, let's do a quick check, and I should have checked immediately. Check. Can you guys hear me? And can you guys follow me? Let me know, please. Oh man, guys, I'm so sorry for this. A big mess. My mistake. It's Friday, right? This is a typical Friday mistake. Let's go to the beginning. Let's go to Ethereum Bitcoin. Is the Ethereum ETF a big failure? Is it a fiasco? Is this something? Should we worry? Yes or no? My thesis is no. And this Ethereum ETF is not a big failure at all. I believe it's very promising, especially for the next few quarters, months. We should understand that a few things. The market, more often than not, is in a range bound environment. Reminder, here, this gray box, Bitcoin was ranging. Here, Bitcoin was ranging here. When it went from one ranging environment to another, we saw a rally, right? Long ranging environment, quick rally, another ranging environment, rally. Here again, Bitcoin is still in this range bound environment. This, I would say, like a rectangle. It made a fake out, I agree. More often than not, when you see a consolidation or a rectangle that comes from an uptrend, more often than not, this is a what? This is a continuation pattern, period. Because you don't want to fade the primary trend at all. Now I want you to remind you that we had already a ETF at the beginning of the year. On the 11th of January, we had an ETF, and it happened here. On the day of the ETF, we witnessed immediately a sell off, quite quickly and quite harsh, quite significantly. And this sell off was a sell off of 21%. And it took us 12 days or 13 days before a real reversal happened. Why was this? Well, I believe it's because of different reasons. One, it's because of the grayscale fee. So a lot of grayscale was one of the like bigger institutions that was holding Bitcoin. If I'm not mistaken, the biggest institution. They were holding 620,000 Bitcoins, more or less, something like that. If I'm not mistaken, please let me know in the chat. And by the way, guys who are listening now, or the girls listening now, I thank you so much for joining me in this live stream. But make sure you hit that like button. Hit that like button, show us some love. We're doing this for you out of love, and we're expecting some love back. So hit that like button. So, one, the fees was a big issue. Secondly, Grayscale was one of the biggest institutions, or not, if not the biggest institutions that's holding Bitcoin, especially at that time. Thirdly, a lot of market participants, they were approaching this Bitcoin ETF as the typical buy the rumor, sell the news event. I'm not saying that everyone was doing this, but surely a lot of participants, they were approaching this in such a way. Also, what we should not neglect is a lot of players were anticipating this Bitcoin ETF. What does it mean? It means that there was a lot of hype built up. We can see this also in the appreciation of price. We saw it quickly. It rised up quickly. It created a lot of bullish momentum. So-called like positive sentiment. And what people don't understand is that the hype of the ETF was fully priced in. However, the real ETF as mechanism, as in buying and getting exposure to Bitcoin, was not priced in because it's just simply impossible. So why I'm saying this, it's I see the basically the same. I see commonalities when we check the Bitcoin chart. Those, oh wait, that's the wrong one. Those who are anticipating a quick pump on the day of the Bitcoin ETF, sorry, the Ethereum ETF, I believe they're pretty foolish, and they weren't. They had too high expectations. So expectation management is extremely important when it comes to investing, especially with big events. Um, Secondly, people they tend to forget that markets often do the opposite what the crowd is thinking. The crowd is thinking, hey, Ethereum ETF pretty bullish, so the price must go up. No, Ethereum ETF is indeed very bullish. However, it takes a lot of time before we actually see that shift in supply and demand. This is something you can find on the internet, and it displays here the inflow and outflow. So obviously, we witnessed a lot of outflow from Grayscale. Why? It's because of the fees, and this should not come as a surprise. A while ago, I shared this tweet where I was saying most likely we will witness Ethereum ETFs next week. It happened. And of course, this is not rocket science. All of us were actually anticipating this. Grayscale holds 10.2 billion in Ethereum, making it the one of the biggest institutions that's holding Ethereum. If I'm not mistaken, even the biggest institution. And they have a high fee, 2.5%, while others have a temporary fee of 0%. So it's just logical that people flowing from Grayscale into other ETFs. So selling and swapping again and rotating from the one to the other, outflows and then getting inflows into the newer or the not. I shouldn't say like the new ETFs. All of them are new. It's just like Grayscale converted their trust into an ETF, but then it's only logical that you see inflows and outflows, and this of course has an impact also on price. So given the fact that price is still did not decline extremely, um, I am not really that worried. Also, we should notice that on the day of the Ethereum, the Bitcoin ETF, it quickly dumped, and it created like this fake out, and then it resumed to the upside. How Twitter is. Whenever things are declining, recency bias quickly kicks in, right? When you see something like this, wait, let me do like the replay. When you see something like this, there's a lot of anticipation, a lot of people are happy, people are making money, and then bam, Bitcoin ETF down. Oh shit. Oh, double shit. Oh no, it's going down. Oh no. Hey shit, this is over. Down we will go. And people were screaming 30K, 20K, blah blah blah. History, people as a collective, they don't change. That's why market psychology is so important to understand. So all with all, I'm not actually worried about Ethereum ETF, and I'm not worried about Ethereum as a ecosystem. I do admit that this chart is not the best looking chart. This is not the most sexy chart. This is well, what to say, what to make out of this, right? Let's not like overly analyze this, but this is pretty poor performance against Bitcoin, because Bitcoin had a lot of momentum, and I believe this crypto rally was more a Bitcoin rally. and most likely people are here to make money. But if you hold a lot of, if you were holding a lot of altcoins and you did not have any Bitcoin exposure, most likely you hated this rally because your altcoins depreciated and your Bitcoin appreciated. And I know that a lot of retail traders, because they want to make good big money, they're betting highly on altcoins. Um, those people, they don't actually care if Bitcoin is going up or down. Of course, they want to Bitcoin going up, so the altcoins going up as well. But Bitcoin um, outperformed many of these altcoins. So again, what am I making of this? I still see a bullish divergence here on the weekly, a triple divergence. It's still here on on this support level. We might, it's possible they're going to take out this low here, or we're going to see like some kind of lower shadow or a wick. It's still too early to come up with conclusions. On the Ethereum, use the T chart. It might want to, you know, um, reverse, but I'm still not too convinced about this. I wouldn't be surprised if we're gonna see like a full retrace here to this zone. But again, this might be a level that you could say, okay, like this is 618 Fibonacci level, so maybe it will reverse, but I'm not too convinced about that, to be honest. Not selling you guys dreams. I'm just sharing here my real thesis without bullshitting you. Of course, I can sell dreams, increase the number of views, making myself more likable. That's not my style. If I see something and I don't like it, I will tell you guys that I'm not liking this particular situation, even though if it goes against your original thesis. This is the Bitcoin dominance chart. Guys, just let me know in the comments who is using the Bitcoin dominance chart, because there's something very important I want to share with you. Who is using the Bitcoin dominance chart? Someone? Anyone? Let me quickly check if I'm not making someone extremely angry. Nope. Who's using the Bitcoin dominance chart? If you're using the Bitcoin dominance chart, I would refrain from using the typical Bitcoin dominance chart that takes everything into consideration, also the stables. I believe that stables is not very relevant, and therefore this Bitcoin dominance chart, I would rather refrain from it, and I would rather prefer to use the Bitcoin dominance that only takes into consideration crypto coins and not stables. So what do we see here? Although they do represent like a similar picture, but I believe this one is more clear. This might be the highest weekly close since long time. We're talking about this was the close, right? This is the close. We're talking about 21 March 21. Breakout from here, while Bitcoin is tanking, would be maybe nice for altcoins, but still it means Bitcoin heavily outperforming many of these altcoins, including Ethereum. This is a place, honestly, because it is a meme chart. Let's start with that. It's actually a meme chart. You cannot trade this, but it does give you a lot of insights. So what I'm seeing is I see a lot of Bitcoin strength against altcoins. A breakout would be not so nice. Not per se bad for altcoins, but it could be bad for altcoins, especially if Bitcoin tanks. But this is a level I do expect maybe a decline here. I mean, the trend is obviously upright. And if you just zoom in this picture here, if you have, then you could consider this as a ascending triangle. I mean, you have like horizontal resistance, and it makes slowly but surely higher lows nearing the apex. If we get a rejection, very nice, especially when Bitcoin is pumping and altcoins are pumping even more. And if this goes down, that's basically the ideal scenario, the most lovely scenario. But what's not a really lovely scenario is what we're seeing here on the S&P 500. Oh, that's the wrong one. Because we are seeing here a few things. One, we're seeing here a massive rising wedge, and a rising wedge is a reversal pattern. However, a rising wedge can also could also turn or morph into a so-called running wedge. So it gives us a bearish thesis and still it goes up again. However, this rising wedge is, we're not only seeing a rising wedge, we also see here a bearish divergence on the Burbicator Pro. And this is not just a bearish divergence, this is a 82% bearish divergence, meaning 8 out of the 10 indicators are showing here divergence. So it's basically on the OBV, it's on the MVI, CCI, RSI, and the rest of them. You can check the Burbicator Pro documents to see all these indicators it's using to identify the divergence. Also, we seeing here that Bitcoin, this is CC, the stands for correlation coefficient, and I added here Bitcoin futures. We're seeing here now that Bitcoin and Ethereum are not correlated, but negatively correlated for quite a long time now. If I believe S&P tanks, probably it could cause some selling pressure also on Bitcoin. So both of them, they decline, and we might see that the correlation coefficient goes to a more neutralish or like a positive zone. Again, you cannot exceed 1 and you cannot exceed -1. So minus 1.5 or minus 1.1, it's impossible with this correlation coefficient. And beyond 1, for example 1.1 or 1.05, it's impossible, because that would be like the highest level of correlation coefficient in this case. Another situation could be that the S&P is declining and then ranging for a while Bitcoin is going up. In that case, that would lead to a further decorrelation of these two assets. Let me know, guys, if you have any questions. And to circle back to the Bitcoin dominance. If I shared this today on Twitter as well, if you copy this and enter this in the symbol search, you will get to see this chart. So this does not come by default. This does not come by default. This is based on a formula. I think Rezoom helped me with this. It excludes all these tables. Again, let's go to the first question. Ethereum ETF, is it a big failure? No. It takes a lot of time. And even if we're going to see a 20% drop, back to range low of this range, this 160-day range, it's still not a big failure. It's just retesting a support level. And I would say if we are here with the information I have now, if we are revisiting 2.8k, um, most likely that would be the bottom, or maybe it could print a swing failure pattern. I wouldn't be. I choose not to worry too much about it, especially since we have like this comparison with the Bitcoin ETF, 20% decline. It's not, not a big deal. Not a big deal for Ethereum, and not a big deal for Bitcoin. Okay, ladies and gentlemen, thank you so much for joining me. Thank you for the questions. Thank you for your time. We have a very popular newsletter, the Burp Nest. It's free. Every week there is some alpha. It's about trading psychology, the fundamental analysis. It's about gem hunting. We share a lot of valuable information. This newsletter comes for free, so you're not going to lose anything. You're just going to feed yourself with a lot of high quality content. Again, guys, thank you